Hello and a warm welcome. You've joined us on Market Cafe right here on ET Now. I'm Ashesha and with me is Kanishka Sarkar, and this is a show where we take you through all the cues that we are taking from global markets, all the stocks that will be in focus, either based on news or based on brokerage reports, and several top stories that we are getting at this hour. But first up, Kanishka, let's have a look at how the global markets performed overnight.
That's right. Let's take a look at first how the US markets fare. Now, US stock futures, first of all, they're witnessing an uptick as investors look to cap a stunning month for the stocks. Now, S&P 500 futures and Nasdaq 100 futures each added about 0.1% last evening. Other than that, futures tied to the Dow Jones Industrial Average, they gained about 130 points or 0.3%. Now, this market's swift recovery this month, that is in June, comes as investors continue to monitor the whipsaw of global trade negotiations. This month, the S&P 500, that's up about more than 4%, whereas the tech-heavy Nasdaq index, that has jumped 6%. The Dow, meanwhile, has added about 3.7% month to date. Now, remember, the US equities came off a fresh high on Friday, with the S&P 500 reaching a new record in more than 4 months. The Nasdaq composite hit an all-time high and also closed at a record after adding about 0.5% on Friday, whereas the Dow Jones Industrial Average, that rose nearly 1%. Now, going forward, investors will be keeping an eye on whether the Senate will be able to pass President Donald Trump's one big beautiful tax bill, which was cleared for debate on Saturday. But how are things looking on the crude front, Ashesha?
Well, yes, so that's how US markets were, but as far as crude is concerned, it is sitting with a cut of nearly 1% this morning. It has snapped 3-day gaining streak, and at the moment it is trading near that $67 per barrel mark. Remember, for the last week, Brent crude declined nearly 12%, and it was the worst week that we have seen since August 2022. The decline was on the back of several global and geopolitical challenges that we were facing, which de-escalated last week. Remember, earlier Brent crude was trading near $79 per barrel mark, after which geopolitical tensions de-escalated and Brent crude declined yet again to $68-69 per barrel mark last week. Now, agencies have reported, citing sources, that OPEC Plus might be considering another output hike of almost 411,000 barrels per day in the month of August as well. Remember, OPEC Plus started rewinding their output. In the month of April this year, they unwound about 135,000 barrels per day in the month of April, followed by 411,000 barrels per day output hike in the month of May, June and July. And now agencies are reporting, citing sources, that perhaps another output hike could be seen in the month of August as well. Remember that crucial OPEC Plus meeting is scheduled to happen this Sunday, that is on the 6th of July. So the outcome from that particular meeting will be very crucial. But for now, Brent is declining nearly 1% in today's trading session, trading near that $67 per barrel mark. Now, apart from oil, let's also put the spotlight on the yellow metal then. And gold is down nearly 0.1% in today's trading session. It is trading near that $3,270 per ounce mark. It is down for the third consecutive day in today's trading session. It declined nearly 3% last week after falling nearly 2% the week earlier. So that's how the commodity markets are positioned at this juncture, Kanishka.
That's right. That's how the commodity markets are looking at this point. But let's also shift focus to the Indian equity market. Now, the Nifty advanced for the second consecutive week, ending above the 25,600 mark last week. It was mainly led by Jio Financial Services and Adani Enterprises. Meanwhile, ONGC and DRL were some of the top losers last week. Now, let's go across to Snehi, who's joining us for the roundup.
Well, yes, if you take a look at Friday's trading session, it was not only a good trading session for Friday particularly, but over the course of the last week, we've seen some very good moves coming in. So if you take a look at Friday's trading session in particular, you had outperformance by the small cap end of the market, because that index ended with gains of more than 1%, while the mid cap, Nifty, Bank and Sensex were all closed. They all closed with gains of more than 0.3%. Another fresh record high for the Nifty Bank is something we saw, so the exuberance over there continues, led by private and PSU banks. Select stocks that were in focus like Jio Financial, Axo Nobel did very well. On the flip side, you had names like Trent, Dr. Reddy's, Tata Consumers and a couple others that ended the week in the red, that ended Friday in the red, pardon me. So if you take a look at how the market setup was, it continued to show some positivity in Friday's trading session as well, and a lot of stocks did well. You had some sectors that outperformed the others, the likes of energy, oil and gas, metals continued this outperformance. You had auto that ended flat. On the flip side, what did not do well was the entire real estate and consumption space. But when we interacted with our technical experts on Friday, here's what they had to make of opening levels that we can expect to see Monday morning. Arpit very well believes that we can expect to open around 25,500 to 25,700, and 25,850 is going to be the next key level to watch out for Nifty. And for Nifty Bank, 57,000 and 58,500 on the upside and downside are the levels to watch out for respectively. When we asked Kunal, his call was 25,500 to 25,800 on the Nifty. And for banks, he believes that there could be a chance of outperformance, slight outperformance by the private names. So he's pegging in levels of 58,000 to 58,500 for Nifty Bank and support at 57,000. So watch out for all of these levels when it comes to both of these benchmarks.
So keep an eye out on all of these levels in today's trading session. But what is the F&O setup looking like? Sharad is now joining us with all those details. Sharad, over to you. Morning.
Good morning. The F&O setup seems very welcoming, be it the Nifty Bank, and of course Nifty Bank is at its all-time high levels, and Nifty is just 2.5% shy away from its lifetime highs. India VIX, it is still stable, slight increase on the day before yesterday's trade, but the PCI, the put-call ratio numbers, these are comfortable if you look at it on the screen, both Nifty as well as Nifty Bank. Now, how does Nifty index futures come up? The change in open interest is very slight, but the trend is long build-up, which is continuing. And the most active options for the Nifty monthly expiry for the 26th June, this is the Nifty call range is 25,600. The trend is call buying, and Nifty put, if you look at it, that is the trend coming in at put writing. The highest option of Nifty monthly expiry, put is at 25,500 levels, while the call comes in at 26,000. Now let's look at Bank Nifty, the index feature. The change in open interest, that has been a higher side, that's almost 9%, but the trend overall seems strong. Long build-up is their highest option coming in for this expiry. Put is at 56,000, and the important level to note for you is call. That's also coming in at 56,000. Now let's look at how the FI positioning has happened. The long short position in the last trade, the long position is coming in at 38%, while you compare it with 38% odd, actually flattish when it comes to this number. Now DI long short positions, long is at coming in at roughly 61%, and that's also relatively remaining the same. The retail numbers, that has slightly gone up towards the long short position, coming in at roughly 54 odd %. So it's kind of even Stevens when it comes to the changes in the overall holdings, but Nifty Bank, still the trend of long build-up continues.
All right, thank you, Sharad, for getting us all those details about the F&O segment. But moving on to understand the global market cues today, we are joined by Geoff Dennis, who's an independent emerging markets commentator. A very warm welcome, Mr. Dennis. Let's before getting to specific markets, let's talk about Trump's big beautiful tax bill that is going to be up for debate later in the day today. So I just want to get your first thoughts about the bill, and how do you think that's going to impact the markets, global markets, in the month of July, given the kind of record highs that we have seen US indices touch towards the end of June?
I think this BBB, as it's called, the big beautiful bill, is a clear risk to markets going forward, because on most sensible, I think, assumptions, it's going to lead to a very large increase in the US debt level to GDP and sustained level of high budget deficits because of the extension of the 2017 tax cuts, and also because you don't really have enough in the way of controls on spending. And so I think we're going to end up with higher deficits. And I think this BBB, so to speak, although clearly some sort of package is fully priced into the market now, there is going to be a danger as we go forward, if these deficits eventually start to pick up, that at some point the bond market will react negatively. So I don't think it's a particular threat to the equity markets right now, but we have to keep our eye on long-term interest rates, because frankly, I don't agree with much that Elon Musk says, but I agree with him when he says this is a really terrible bill and it is going to cause a problem for the bond market eventually down the road.
So that's as far as the big beautiful tax cut bill is concerned. But Mr. Dennis, also what are your thoughts on the tariff deadline which is completing on the 9th of July? What kind of impact will that have on emerging markets, including India, especially because Donald Trump went ahead on record and said that he does not intend to extend the deadline beyond the 9th of July. What kind of impact will that have on emerging markets?
Well, first of all, let's see if he actually does that. I think there's still a very good chance that he will kick the can down the road a little bit more. We don't know if he's going to reimpose all of these tariffs. I think if he were to do that, I don't think it's going to have that negative an impact on the emerging markets. And I'll tell you why, because all of the talk, including from me, by the way, early in the year, was that the tariffs typically should raise that country's currency because it runs the risk of pushing inflation up and therefore interest rates. With this particular tariff, a set of tariff policies or tariff announcements, which we've had since Trump came into office, you've had a flight from US assets of all sorts, particularly, of course, from the dollar. And so I think if you were to get significant tariff announcements in early July the 8th, July the 9th, I don't think it's going to break this very nice move we're getting in the emerging markets generally, because I think it's going to lead to probably further declines in the US dollar, which have been a very, very important driver. EM is up just over 14% this year. The dollar trade weight is down just over 10. And I think that's probably going to go further if Trump eventually comes up with, a new set of tariffs in a few days' time. Now, for India, I think India is one of the better situations, frankly, to end up with some sort of a deal with the US on tariffs, because I don't think it's as controversial a trading partner as, for example, is China or Korea or Europe generally. And so I don't see India being a big relative loser here. But I guess my main point would also be that I think it's still a pretty good risk that Trump will not do what he's threatening to do on July the 8th, 9th, and may very well kick the tariff can down the road a bit further.
All right. Thank you so much, Mr. Denise, for those views. Great having you. Thank you so much for joining us this morning. Have a great day ahead. All right, moving on then, let's also take a look at all the stocks that are likely to be buzzing in trade today. Rabinder is standing by with just that list.
Well, there's a lot of stock that can be focused on back of the order win, strategic investment and US FDA approval. Firstly, let's start with BHEL, where company has received LOA from Adani Power Limited for 6 thermal units of 800 megawatt with an order size of rupees 6,500 crore. Apart from this, Titagarh rail system can be in focus. The company and its consortium has bagged a 431 crore contract from Maharashtra Metro Rail Corporation for the supply of 12 additional trains, and the execution is scheduled to be completed within 30 months. Apart from this, Granules India can be in focus, where US FDA has issued a Form 483 with one observation for companies wholly owned foreign subsidiary in USA. Moving to next, Alembic Pharma can be in focus, where company has received final approval for one of its cancer injections. So back of this, Alembic Pharma can be in focus. Apart from this, Aurobindo Pharma can be in focus, where company say that the restart of penicillin gene production at Kakinada facility post receipt of the consent to operate from Andhra Pradesh Pollution Control Board. Apart from this, Piramal Enterprise can be in focus, where company has invested 700 crore in its wholly owned subsidiary Piramal Finance Limited via right issue. Moving to next, Asian Paint can be in focus, where company has acquired remaining 40% stake in the White Teak for rupees 188 crore, and with this White Teak will become a wholly owned subsidiary of the Asian Paint. Apart from this, Prestige Estate can be in focus, where Prestige Estate and Aryan Group to jointly develop a 1,600 crore residential project in Chennai. And lastly, Ramson Industry can be in focus, where Ramson Automotive Limited, a step-down subsidiary of the company, has received a letter of intent purchase order amounting to rupees 80 crore for Ford Oxon for supply of spare wheel, and the order is completed within 10 years. And Ramson Industry has also and is Automotive System to Brazil LTA incorporated in Brazil, entering into a strategic technical license for a technology transfer to support local OEMs in Brazil. So back of this, Samsung industry can be in focus.
Those are all the stocks that will in focus in today's trading session. Ravinder, thanks so much for joining us with that roundup. But let's go across to Snehi to get a quick lineup of all the events that are going to take place today. Snehi, over to you.
Well, yes, lots to watch out for in the upcoming week's trading session. So let's get started with that long list right there. Back home, we're expecting the IIP data, that's the industrial production data, along with fiscal deficit data. You also have HSBC manufacturing PMI numbers that will be coming on the 1st of July, so watch out for all of these cues. From the US, you have PMI numbers coming in as you have with all major economies. We'll be talking about that in just a minute. You have manufacturing data, Joel's job opening, you have non-farm payroll data, initial jobless claims, and of course 4th of July the US markets are going to remain closed. From the UK, over the course of the week, you have GDP as well as S&P global manufacturing PMI numbers. From Eurozone, you have PMI, CPI, unemployment as well as PPI numbers coming out. So lots of macroeconomic indicators are going to be reported by some of the most major economies of the world. Let's keep it going with that list, because from China you have PMI numbers coming in. Similarly, from Japan you have services and manufacturing PMI numbers, along with industrial production, Tankan survey and household spending, all interspersed over the course of the coming week. In terms of corporate action and board meetings, all eyes are going to be on AU Small Finance Bank and Federal Bank. Boards are going to be meeting on different days to mull fundraising plans. You have a couple of stocks that are going to be trading dividend as well. Concord is going to be trading bonus issue over the course of the week, so watch out for that as well. In terms of AGMs, the list is long. The likes of Dalmia Bharat, Bank of Maharashtra, Tata Steel, Trent, Cyan, DLM and many more will be having their AGMs over the course of the week. In terms of some other news and events, lots of commentary from ECB and Fed officials is something that we can expect to see. The ASEAN Plus 3 Bond Market Forum in Kyoto will also be taking place, so watch out for that very closely. But well, yes, other than that, you have President Donald Trump's target date, which is July 4th, for signing a Republican-backed tax and spending bill. That's the big beautiful bill that he's been talking about. So that deadline is going to be fast approaching. And of course, the week after that, the 9 July tariff deadline still is an overhang for the market. So keep a close eye on all of these cues for the coming week's trade.
All right, thank you so much, Snehi, for getting us all the cues that we should be watching out for in the day. But it's time now to take a very short break on this edition of Market Cafe. We'll be right back with more news and updates on the other side.
When the stakes are high and the answers are elusive, there's one voice unafraid to challenge the status quo.
Up nearly 1.6% in trade today, up 650 points as we speak. Let's also have a look at other Chinese and Hong Kong markets at the moment. So Shanghai, that one has also started with a positive bias, up nearly 0.1%, 3427 is where it is currently trading. On the flip side, though, Hang Seng is sitting with a negative bias, down 0.5% in trade today, down nearly 106 odd points. GIFT Nifty, that one is suggesting a positive start for the Indian markets, up nearly 20 points as we speak, 25,771. So Asian markets have largely started mixed. Hang Seng is in the red, but on the flip side, we have a Japanese market which has started in the green. We have Kospi, and Chinese market has also started in the green. GIFT Nifty suggesting a positive start for the Indian markets. Kanishka.
That's right. The GIFT Nifty suggests a positive start for the Indian market, but let's also take a look at some of more cues that we are following this morning. Now, Torrent Pharma is all set to acquire a controlling stake in JB Chemicals from KKR for almost 12,000 crore rupees. Now, the buyout will be followed by an open offer to public shareholders, after which a merger will take place to build a diversified healthcare platform. Anurag Joshi joins in with all the details.
Hello.
Hi, Anurag, we can hear you. Anurag, can you hear us?
Torrent Pharmaceuticals is acquiring a controlling equity stake in JB Chemicals and Pharmaceuticals from U.S. private equity investor KKR and Company. Now, these talks between Torrent Pharma and JB Chemicals are very recent and come on the backs of the past round collapsing last year, where Torrent was again one of the contenders. Now, the acquisition value for buying JB Pharma is at an enterprise valuation of almost 26,000 crore rupees on a fully diluted basis. Torrent is acquiring a little over 46% stake for about 12,000 crore rupees from KKR. And this is happening at a purchase price of 1,600 rupees for this stake. Following this, Torrent is going to be making an open offer up to 26%, and that will be at 1639.18 to all the minority shareholders of JB Chemicals. There's another transaction where Torrent is acquiring a 2.8% equity stake from JB Pharma employees. That's at 1,600 crore rupees. Once the acquisition of the KKR stake is completed, JB Pharma will be merged into Torrent, and the swap ratio for that is that for every 100 JB shares, shareholders receive 51 Torrent shares. And this is another of the consolidation which is happening in the healthcare sector right now, and which has seen a spate of M&As in the past.
Okay, so a big deal happening in the pharmaceutical space. Anurag, thanks so much for joining us with all those details. But my colleague Shrishti Sharma is also now joining us to explain the contours of this particular deal with focus on valuations. Shrishti, tell us valuations. What do they suggest for the deal?
All right, so when it comes to the valuations between Torrent Pharma as well as JB Chemical deal, this deal is being valued at EV by EBITDA multiple of 25 times, which is at a higher end of some of the recent deals that we have seen in the pharma space of late, especially when it comes to the past 2 to 3 years. When we look at the valuations, then yes, Torrent is known for going for such inorganic expansions, and they are known for doing such deals at a premium valuation. But when it comes to acquiring JB Chemicals, then yes, a lot of synergies are at play as well. We'll talk about that, but deal is done at a higher end of the recent large pharma domestic deals. Other than that, in terms of the merger ratio, like my colleague Anurag also mentioned, that the Torrent will merge with the JB Pharma post-acquisition. Swap ratio is 100 shares of JB Chemicals equivalent to 51 shares of Torrent Pharma. But now let's talk about the synergies and the rationale, because yes, the valuation is at play, but what are the synergies that will be in play? That's interesting to watch out for, because for Torrent Pharma, their play and their presence in the domestic pharmaceutical space will actually be substantial, where they will be in the top 5 companies when it comes to the market share and the leading position in the domestic pharma space. They can hold almost a market share of 4 to 5% in the Indian domestic pharma, and not just that, it will also boost their international CDMO entry. This will mark the international CDMO entry for Torrent Pharma, because JB Chemical has a good presence in the CDMO space, and CDMO space for JB Chemicals is one of those high margin product businesses and segments as well. Other than that, in terms of their portfolio, this will give a very big boost to their gastro portfolio, because both these companies have a leading position over there, and some of their chronic therapies as well. They will actually get into that as well, and some of the newer segments wherein Torrent Pharma will have its presence via JB Chemical route in the domestic pharma, case in point being ophthalmology. Other than that, in terms of their overall revenue share, then yes, for the revenue and the combined revenue, this will stand at over 15,000 crores. Now, the profit will also get a boost from being a 19,000 crores profit company. When it comes to Torrent Pharma, the combined entity will be around 2,600 crores. So all in all, the deal is seen to be at a higher valuation, but seems like a lot of synergies will also be at play.
All right, thank you so much, Srishti, for getting us all those details. But moving on and shifting focus to the auto space then. Now, earlier in an exclusive chat with ET Now, Santosh Iyer, who's the managing director and CEO of Mercedes-Benz India, talked about Mercedes GT63 and GT63 Pro hitting the Indian roads. He reveals the prices and the timeline of the deliveries for the hot launches. He also talks about the company's expansion plans going forward. Let's take a look.
The sports car culture in India never existed. If you go back 10 to 12 years back, I think that's where we got the SLS AMG in India. That was the first big AMG launch, the gullwing design. A lot of customers bought it. And then, of course, we have been introducing a lot of AMGs, so on and so forth. I think over these years, we must have sold around more than 2,000 AMGs in India. A big breed and enthusiast. We also used to do track events. So these cars, their predecessors were also bought by many customers, and now for this car, even before we introduced here, you must have observed I drove in a lifetime drive version because we want to get the first right-hand drive for our customers as early as December. But there is already an anticipation, so I have more than 10 odd customers who have already booked the cars and waiting. So after today's announcement, I'm sure it will only increase. So yeah, there is a growing cult of customers who love these sports cars. Again, there are two versions. One is more track focused, one is more four-seater. So I think this is a growing trend, not only for us, but I think the category itself is growing in India.
But the other category is the luxury car market in India. That is seen to be growing. When it comes to the mass segment, there are not much expectations of growth this particular year. But what about the luxury side and specifically on the BEV? What is your expectation?
Well, so I would say if you look at the total market, mass market is still growing 2 to 3%, but luxury will be say 5-6%. So that's the starting picture. So it's not an exponential growth in luxury compared to mass. It's doing better than the mass market. So that's fine. Let's talk about electrics. That was your second point. But there, if you see Jan to May, total electric cars luxury segment has grown by 66%. We as Mercedes-Benz have grown by 73%. So we have actually much more grown, and that's a rapid pace. If you look at the penetration of EVs in luxury cars, is 11%. I think that's almost crossing double digit, and that's quite historic. And this you compare with mass market is at 4 to 5%. So I think the narrative is clear. Customers want to go into decarbonized cars, electric cars. It's taking time, but we are introducing both. We are, today I am introducing an 8-cylinder V8 thoroughbred race car, which is running on combustion engines. But 2 days back in Affaltabad, the AMG also showed the electric version. So I think this will continue. We will allow the customers and the market to decide. But overall, I think this year, maybe it's not a rapid year of growth. It's a year of consolidation. I think we have to be thankful in India that, what's happening worldwide. India is still growing. If you look at capital markets, real estate, car growth also. Of course, the expectation is why not 10% or even more. But I think as long as there is growth, and let's also remember the average selling price is going up and still the growth is coming in. So this, I think, is still positive, and hopefully it continues. So we are all keeping fingers crossed. Yeah.
All right, and shifting focus to some national stories then, at least 3 persons, including 2 women, were killed and around 50 others were injured in a stampede near Sri Gundicha temple in Odisha's Puri on Sunday morning during a ceremony related to the ongoing Rath Yatra festivities. And shifting focus then, and a cloud burst in Uttarakhand's Uttarkashi district swept away 9 construction workers. Bodies of 2 laborers have been recovered so far in the STRF-led rescue operation, and hunt for the missing 7 is underway currently.
All right, moving on, amid a growing chorus against the introduction of the Hindi language in Maharashtra schools from classes 1 to 5, the state cabinet has decided to withdraw 2 government orders on the implementation of the 3-language policy. Ministry of External Affairs outrightly dismisses Pakistan's allegation of India's involvement in the Waziristan attack on June 28th. MEA has rubbished the claims as baseless and called and has said that they deserve nothing but contempt.
And shifting focus to some global stories then, the US Senate has taken a major step towards passing Donald Trump's sweeping tax cut and spending bill, despite a bombshell analysis by the Congressional Budget Office estimating it could add over $3.3 trillion to the national debt. The procedural vote passed 51-49, with 2 Republicans joining all Democrats in opposition. Critics say the bill favors the wealthy and threatens key social reforms, while GOP leaders push ahead, aiming to pass it by the 4th of July. Musk is at it again. The Tesla and SpaceX CEO slammed Trump's mega bill as utterly insane just hours before a key Senate vote. In a fiery post on X, he warned the bill could destroy millions of jobs and could cause immense strategic harm, citing cuts to green energy initiative. Musk, once Trump's top supporter, has also since turned harsh critic, calling the bill a disgusting abomination. The rift underscores a dramatic falling out between two of GOP's biggest power players, as Musk's birthday saw nationwide anti-Tesla protests. The Federal Reserve says America's biggest banks are strong enough to withstand a severe recession, clearing the way for higher dividends and stock buybacks. In its annual stress test, the Fed said that 22 large banks could collectively lose over $550 billion in a hypothetical downturn but still retain capital well above regulatory minimums. The results, stronger than last year's, signal financial resilience even amid a simulated 10% unemployment rate and housing market collapse. Banks may now return more capital to shareholders, with some analysts predicting an emphasis on buybacks over dividends. And Nvidia insiders have sold more than $1 billion in company stock over the past year, with roughly half of those sales occurring in just the last month, according to reports. The selling spree came as Nvidia's stock surged to record highs, up 44% in 3 months, despite global tensions and export restrictions. CEO Jensen Huang alone sold about $15 million in shares last week as a part of a larger $900 million plan. Despite the sell-off, Nvidia remains the world's most valuable company.
All right, then moving on. Trump has in an interview said that he has secured a group of very wealthy people to buy TikTok in the US. Now, Trump says he will reveal the identities in 2 weeks and believes that Chinese President Xi Jinping will likely approve the deal. Now, the Biden-era law mandates TikTok divest or shut down by January 2025. But Trump, who had extended the deadline 3 times, says that the app helped energize young voters in his campaign. A previous sale attempt collapsed after China pushed back on US pressure and new tariffs. Now, China's tech giant Baidu is all set to release its powerful Ernie AI model as open source today, marking one of the country's biggest AI moves since DeepSeek. Now, the decision is seen as a dramatic shift from Baidu's traditionally closed approach. Now, experts say it will drive down prices, challenge proprietary players like OpenAI and Anthropic, and also empower developers worldwide. All right, staying with updates from China. Now, slowdown concerns in China may resurface as manufacturing activity contracts for the 3rd straight month in June, according to an official survey. Now, this will fuel hopes for more stimulus to cushion the impact of ongoing trade disruptions. The official purchasing managers index also improved slightly to 49.7% in June from 49.5% in May, but it stayed below the 50 benchmark, separating expansion from contraction. Now, the figure was in line with analyst forecast of 49.7 in a Reuters poll.
All right, with that, we need to slip into a very short break, but we'll discuss many more news and updates on the other side of the break. Don't go anywhere.
Down to a 9-month low that was dragged by a plunge in electricity output. However, strong momentum in cement and steel is likely to cushion the fall. Varun is joining us to tell us what the street is expecting.
Well, so the IIP numbers are expected to come at 9 months low, and the average is actually 2.4%, that is Nirmal Bank's average, and also ICRA is expecting the IIP number to come at in the range of 1.5 to 2.5%. Now, if you look, the overall IIP would be supported by manufacturing, although the low IIP numbers, that is the 9-month low, actually reflects the marginal slowdown in the core sector growth and also slightly higher base. Now, the core sector number that has come at around 0.7%, which was at 9 months low, and the slowdown was basically because of the electricity production, which was down around 5.8% on a YOY basis. Now, the electricity production was basically down because of excess rain that was there in the later half of 2002, May 2025, and because of this, the electricity generation in that month were actually low, which actually pulled down the overall growth in the core output. Also, if you look at the coal production numbers, they were slow to around 2.5% on a YY basis in the month of May versus 3.5% that was there in the month of April 2025. No doubt the construction related sector, they did well in the month of May, but if you look at the overall coal sector growth, that was at 9 months low, and that's the reason you can see the overall IIP numbers coming at a 9-month low of around 2.4%, that is Nirmal Bang's estimate, and also ICRA actually has a bigger range of 1.5 to 2.5%, so keep an eye on this.
Well, I saw on IIP data later this evening. Varun, thanks so much for joining us with all those details. But shifting focus then, Nilesh Shah, MD and CEO at Envision Capital, discusses his views on various sectors. While he remains bullish on financials, he believes that large cap IT companies continue to face headwinds. He also touches upon the need for more measures to boost domestic macroeconomic policies. Listen in to an excerpt of this conversation which we had with him.
From a pure macro and especially external macros, probably a lot of good news is out there. It's more about now what we do in terms of our own internal policy measures, economic reforms, and I'm not talking of the big bang reforms, but just a few things could pretty much further buoy not just the sentiment but also further lift up the fundamentals and contribute to earnings growth. I clearly believe something that we really need to look forward to and watch out for in 2025 is clearly going to be the GST 2.0. I mean, that's something which has been in the works in terms of enough of reports out there and the media that the government is looking to now take GST to the next level, whether it's in terms of cut in tax rates or whether it is in terms of rationalizing taxes or reducing tax slabs and ease of implementation, all of that. I clearly believe that that's something which is probably less spoken about, less appreciated, but I actually believe that's going to be very, very powerful. So that is one, and two is upping up the spend on infra. I mean, this financial year, the spend on infra was kind of pretty much at 3%, which was in line with what it was last financial year. But there is room for that to kind of go up. I clearly don't think we have seen any peak of spending on infrastructure till we get to at least 5 to 6% of the GDP, which itself is growing. So I probably believe that in the next few years, you'll probably see infra spend probably double or maybe even go even higher than that.
Right, so sounding positive. Nilesh, hi, this is Nehi also joining in the conversation. When we interacted last, I remember you had a view on IT, wherein you said you were positive on the space. You also said that if Infosys corrects a further 10-20%, it would start looking like an attractive buy. Now, with everything that's been happening globally, especially since Accenture's numbers have come, is that challenging your view on IT at all?
No, I don't think, because ultimately, I mean, this is a space, especially the large cap IT, is basically just been growing in about single digit. I believe that for a growth market like India, where we have so many other growth options, unless you are essentially hugging the benchmark or one just basic.
All right, that is Nilesh Shah's view on the sectors that he's bullish on. But moving on, AMFI will officially announce changes soon to recategorization, with Indian Hotels, Solar Industries and Mazgaon Dock as likely large cap entrants. Varun is joining us again with all the finer details on this front. Varun, over to you.
Well, so the AMFI recategorization will happen in the first week of July, and actually cutoff period spans from January 1st of 2025 to 30th of June, that is today, of 2025. And the actually categorization will take effect from 1st of August 2025. Now, the overall changes will not lead to any major inflows or outflows from any index or any stock, but the overall cutoff, the large cap and the mid cap cutoff is expected to change. Now, the large cap cutoff, it is expected to come down from 1 lakh crore to around 91,600 crores, and the mid cap threshold is expected to come down from 33,200 crores to around 30,700 crores, and these are all our Nuvama estimates. There are 3 stocks which basically you need to keep an eye on, and this is because of the demergers that have happened. Siemens Energy, that would enter into the large cap segment, ITC Hotel, that would enter into the mid cap segment, and also Hexaware would enter into the mid cap category. Other than this, there are several changes that would be made. For example, the large cap entrants would be Indian Hotels, Mazgaon Dock, Max Healthcare, JSPL, Union Bank of India. These are some of the probable names which could enter the large cap segments. The stocks which would move from large cap to mid caps, one of the interesting names is Hero MotoCorp. Other than that is Indian Overseas Bank, you have ICICI Prudential Life, Polycab, Bosch. Stocks which would enter the mid-cap categories are basically Narayan Rudalaya, Laurus Labs, Chola Finance, ITC Hotels. These are some of the stocks which could enter the mid-cap segment. Stocks which could move from mid-cap to small-cap are Ola Electric, IGL, Syngene International, Tata Technologies. These are some of the stocks which could move from the mid-cap to small-cap segment. So there are several changes in stocks that could be made, but yes, Nuvama is not expecting any big inflows or outflows because of AMFI recategorization. But yet, look at the stocks and the overall changes will happen in the first week of July, and the actually effective date would be 1st of August 2025.
Whole host of stocks that will be in focus on the back of AMFI recategorization. Varun, thanks so much for joining us with all those details. That's all the time we have on this edition of the show. But before we wind down, top market voices remain firmly bullish on the India story, with optimism stretching over the next 10 to 20 years. They see India as one of the safest, most dynamic investment destinations, backed by strong growth, healthy margins, and rising entrepreneurship, and a decoupling from global jitters. Have a look.
In the last 3 years, you still made like 14-15% CAGR. So you will continue to hopefully get that 12 to 15% return if you invest in Nifty and if you just stick to really large cap. Where people like me see an opportunity is on the select sector, select stocks and mispricing in the market, which happens from time to time. So when we last visited your channel, I remember January to March, and there was literally a lot of panic. So if you buy India in that point, at that time, and if you buy a stock specific, that is the alpha which is left in the market. This volatility gives you time and opportunity to invest, and that, to my opinion, really creates that extra alpha which people like me are looking at.
Otherwise, market has been very, very nice and scaling up. And from 2020 post-COVID, we are seeing virtual boom from 8,000-9,000 post-COVID COVID correction to now 24,000-25,000. So 3x in 5 years. So it's a very sustained rise, and it is very resilient. I mean, good thing is that not only it is rising, the corrections are very, very shallow, so that is giving the confidence. Even it is giving a lot more confidence to retail investors, and journey has been very good.
This is a market which has little room for multiples to move up, and I think even across sectors, the under and overvaluation is one of the lowest I have seen. I think this is a classic compounding market, and margins are fairly healthy across sectors. So, I mean, barring isolated companies, we don't see too much room for margins improvement. So at a very broad level, I feel the profitability should track, profit growth should track nominal GDP growth around 10-12%.
Confidence is coming back, and then market realized that India is the most safest place. In fact, 3 months back we made this call, not only from India is a risk-on rally and globally is a risk-off. But what is very important is the decoupling process for India is beginning. We believe India has now decoupled from global market. That's a cycle which we have been talking about when 2025 it begins, and we have seen now the decoupling process has begun.
I'm still very bullish on India. There's so many bargains to be had. In fact, I was just looking at the market before we came on the air, and I'm very bullish. There's so many great companies with good earnings, with very strong return on capital. Thing to me is the hardware part. As you know, India already is a big software producer and exporter, but going forward, I believe they're going to be more of a hardware, technology hardware producer and exporter, and that's one sector we have to look at. And of course, as I mentioned, defense will be increasingly important, and infrastructure. As you know, India is embarking on a very aggressive infrastructure spending program, and that'll be interesting.
when the stakes are high and the answers are elusive. There's one voice unafraid to challenge the status quo.